We know that investing in real estate syndication can be scary, especially if it's a first time investing with a particular group. I'm Dan Cosgrove, the CMO of Anthem Capital, and today we are going to help you feel more confident in your investment decision by giving you the top 10 most important questions to ask that investment team before you invest. And a friendly reminder here that you don't have to worry about taking notes. If you head over to our website, you can download our ebook that has all of this information as well as several other educational readings that will help you learn more about this wonderful world that we call real estate investing. So without further ado, here are the top 10 questions you should ask the real estate investment team before you invest with them. Number 10, what is their track record as a company? Although past performance does not guarantee future performance, it will give you a better idea on how many years of experience the team has. Ideally, you want to invest with a group that has seen both the highs and the lows. Did they make it through a recession and still pay out distributions? Or have they just been coasting off of the rising demand of this type of investment opportunity? Number 9, what type of communication would you be receiving as an investor? Nobody wants to be left in the dark on the performance of their investment. Look for groups that emphasize the importance of communication, are guaranteeing at least a quarterly update on your investment, and are transparent about the good and bad parts of the investment performance. Number 8, who is the on-site property management team, and do they manage similar assets in the surrounding area? We all know that strategy without execution is useless. The investment team can create a great strategy, but at the end of the day, it will be the boots on the ground property management team that will ultimately drive the success or failure of that strategy. You will want to learn about this property management team and their track record in that particular market. A bonus is if the investment group will have one of their own general partners as boots on the ground in that market, so they can routinely check in with the property management team to ensure they are maintaining good performance. Now, number 7, has the group worked with that property management team before? Given the property management team is so key in the performance of your investment, you want to know if this team has a track record with your investment team. If they do, then that should give you some confidence in the plan playing out properly. Number 6, what type of loan is being taken out? This question, there's a lot to unpack in this question. You'll want to know the loan to value ratio, if capital expenditures are built into that loan, the length of the loan, if there's an interest only period, and finally, what is the interest rate on that loan? Since the loan is such an important part of the investment, we will have a separate webinar in our monthly office hours that will talk about specific things as it pertains to the loan. But just know, ask questions about a loan as it's very, very important. Number 5, what is the business plan? Is it a value add play where about 50% of the units still need to be updated? Is it a place where rents are just significantly below market? Are there opportunities to add more units to the property through development or conversion of non-optimized space? Although we know plans change, you want to still get a read from the investment team on how much they had put into the investment before you had hand over a $50,000 check. Make sure they've done their homework so that you feel a little bit more confident. Number 4, what is the debt service coverage ratio in year 1? Debt service coverage ratio means DSCR. The last thing you want to deal with as an investor is to deal with a capital call in order to cover the expenses at your investment property. Lenders like to see plans that can cover the DSCR by a comfortable margin of at least 1.15. If the investment team projects a DSCR below that, then ask questions on how they would manage to cover DSCR in the event it dips below 1. If they say they will cover it out of their own pockets and not ask you for additional funds, then you will not have to worry about investing anything incremental than what you already do in your upfront investment. Number 3, what is the reverse cap rate? Too many real estate syndicators manipulate this number to their advantage and to passive investors' disadvantage. The sale of your investment property at the end of the cycle dictates at least 50% of your total return on investment. During the holding period, you might see about a 5 to 7% cash on cash return, but the real value is experienced at that final sale price. Thus, you want to always look at the reverse cap rate, aka what the projected cap rate is at when you plan to sell your property. From a seller's perspective, you want to have a lower cap rate, as that means the value of your property is higher. However, we would say watch out if the investment team is just expecting cap rates to continue to compress in order for them to hit that projected return. Look for deals where the investment team is being conservative on the reverse cap rate and are predicting at least a 0.75 to 1% increase in the cap rate during your holding period. Now, number 2, what is the exit plan? Since real estate investing is a relatively illiquid investment, you want to know how long your money will be tied up in that deal. A typical deal does go full cycle in about 5 years, but maybe this deal has a 10-year plan, or maybe it's a permanent hold. If the investment team plans to hold the property longer than anticipated, then do they plan to refinance so you can get at least a majority of your principal out of the investment? Just ask questions like that. Then finally, and what we determine is the most important, is what is the fee structure for my returns? This honestly is one of my biggest gripes with REITs or large investment platforms like Fundrise. Because they have so much overhead, they tend to have fees that eat up a lot of your returns. Look to understand what their profit split is between their investment team and your passive investment. We tend to like partners that range between 80-20 or 70-30, in which 70 to 80% goes to passive investors. Look for the preferred return as well. Do you get paid first? Does the real estate investment team get paid first? Or is there some private equity group that might be a major investment in the deal and they get the first payout? PE groups are common in these types of investments, so they might get that first cut, but you will at least want to be second before the real estate investment team gets their cut. And then finally, look at their asset management fee. Is the asset management fee tied to the value of the asset or the gross income of the asset? Now, let me explain why this is so important. You want the fee tied to the gross income, as that is a lower cut. So let's say there's a 2% asset management fee, but they tie that 2% to the $30 million value of the property, meaning that that team gets $600,000 a year on the asset management fee. Now let's play out that same scenario, but now that 2% is tied to the $3 million of gross income earned at that property in that year. That means the team is getting $60,000 a year in asset management fees. That's 10x less just based on what the fee is pegged against. As for a fair asset management fee, anything between 2 to 3% is reasonable. And honestly, contrary to popular belief, you do not want to see an asset management fee that really dips below that 2%, because that could mean that investment group could be limiting their resources in fully supporting the execution of that business plan. So thanks for watching. What are the most important questions I should ask as a passive investor? If you want to learn more about real estate investing, such as the top 10 reasons to invest in real estate, the 3 keys to look for as a passive investor before investing, the 5 watchouts in real estate investing, and a lot more, you can follow us here. You can visit us at anthemcp.com by scanning this QR code or clicking the link below. And that will unlock a lot of content for you to help everyday investors just like you become more educated on the wonderful world of real estate investing.